but I do also agree with this being probably more of a price-sensitive location than some other areas, which I'm a big believer in kind of masses versus classes today.
I can imagine that you're inserting yourself in a neighborhood for folks that are unable or unwilling to purchase a home.
There was an article in the Wall Street Journal talking about how like that percentage of real estate taxes and insurance is now 30+% of your living costs when you're talking about home ownership, which is a pretty big number. Hi, welcome to this week's episode of Real Estate Anonymous. Excited to have our listeners with us. This week, we're going to talk about a 34-unit townhome deal or build-for-rent type deal outside of the Tampa MSA in Seffner. And Elliott's going to tell us about his travels and how he's turned into Bill Murray in Groundhog's Day. I think that we're going to reach consensus that the thesis makes sense from a build-for-rent perspective. It's just at what price. So hope y'all enjoy, and we'll look forward to picking it up soon. Thanks. Hi, welcome to this week's edition of Real Estate Anonymous. I'm Brett Moss with Elliott White and Eric Weatherholtz, and we're going to do a lot of problem solving today. But talking about a townhome deal over in East Tampa. I know Elliott's on the road today. Elliott, any interesting insights into the life that we live from your life on the road, as Jack Kerouac would say, or on the road?
You know, I'm on the road enough. Looking at these different deals, and I always tend to stay in Marriott products, Courtyard, Spring Hill Suites, whatever it is. And I woke up this morning and I looked at the hotel room that I'm in, and it feels a little like, you know, that movie Groundhog Day? Right, you're just in some random part of the country. Today I'm in Florida, and that's probably as specific as I'll get, but I'm in Florida, and it's just, they're all kind of the same. So you wake up and it just feels like, God, I've done this before. I don't know what day it is, but I've certainly been here. So that's it. And I got to interact with City Council yesterday.
Okay.
On a project we've been working on. So got to, you know, the rubber meets the road with local government. But it's been an enjoyable week so far. Productive. What about you, sir?
Warmer here than in Boston, I can tell you that, albeit a little chilly here in Florida.
No question.
So we got that going to us, which is nice.
Yep.
Well, and I would say, going back to your comment, Elliott, about being on the road and feeling like Groundhog's Day, have either of you guys had the situation where you have been traveling a fair amount, you're in maybe your third hotel of the week, and you're like, I don't even know what number my hotel room is anymore?
Yeah. Oh, for sure. That's why you got to keep that little paper card in your pocket.
Yeah, exactly. Does that ever happen to you, Eric? Or just the idiots like Elliott and I? Hey, wait, where am I?
I've gone to the desk and said, like, hi, I'm Elliott. I know I'm staying here and I have a key, but I don't know what room I'm in.
Sir, are you on drugs? Not yet. Give me my room number.
Yeah, but it's early and I'm in Florida.
Yeah. Yeah, right.
I remember going to one of those nowhere Florida Courtyard by Marriott's, you know, and where you'd have to get the key at the counter and then, you know, walk a long winding hallway to the thing, and then the key didn't work, you know?
Hell yeah.
And you've been on the road and you've dragged your suitcase back to the thing, go back a second time, doesn't work, go back a third time, full of, you know, exhaustion and annoyance, and go in to find a unmade bed and an unflushed toilet, and just being like, that's fine, I'll take it.
Yeah. Right. It's okay. I'm that kind of a guy.
Walking back to the desk.
Yeah, I'm not doing this again. Yeah.
I've walked into a room before where there's been a dude using the bathroom. And I said, hey, man, I'll just hang out here with you. He was like mortified.
Yeah, finish packing up. I'm next.
There's two beds in here, man. You pick which one you want. I'm good in the other.
Jesus. Yeah, I was in Texas a few weeks ago, and there was this crazy long line at the airport for rental cars. And I thought, you know, if it's late, I'm just going to take an Uber to my hotel. I'll deal with the rental car in the morning. I get to the hotel. It's probably 12:30. You know, I got in late. It's 12:30. It's almost 1 in the morning. I go up to my hotel room. It's like 84 degrees in the room. And I thought, well, I just got to turn the AC down. I haven't prepped the room or whatever. So I hammer the button down. I'm going to shower. Let me, and by the time I'm out, this will be normal. I get out of the shower. It's still 84 degrees. Now it's like 1:15 in the morning. I got to put on dirty clothes to go back downstairs. And I call the guy. I'm like, dude, what the, Thankfully they were on it, but that shit's the worst part about traveling.
No, 84 degree the hotel room in Texas just means that smells real funky.
Yeah. Oh yeah. Yeah.
Low grade bead of sweat on your forehead.
Exactly.
Yeah.
Where are we going this week?
We're going to stick into it since 2 or 3 of us are in Florida. We're going to stick to a deal in East Tampa. So we're going to hang out in Florida here for a little bit. And so since I had so much fun getting eviscerated on the last build for rent S deal outside of Savannah by you two fine gentlemen, I thought I'd go back to the well here. And maybe if you could just give me a hard time about the deal versus my clothing or any other idiosyncrasies or dumb words that I use, I'd appreciate that this week since I've
Brett, we know that deal in Rincon, Georgia that you pitched us is still for sale.
Well, I mean, they're charging too much, but it is purchasable at some price.
It's purchasable.
It's purchasable. That's my first made-up word of this podcast. It's purchasable. Even I don't even know if that's a word. I don't even want to get y'all's feedback on that.
So I'm noticing a blue T-shirt.
Well, that's the other thing for Elliott. If you just wear the same stuff every time, people don't know if it's dirty or not. So the assumption is yes.
It's a good move. I like it.
Thank you. So we're going with like kind of a blue-gray one this week, and I appreciate you paying attention, Eric. That does make me feel good. So I'll take it.
So what prompts the choice? Like when you open the when you go into that walk-in closet. First of all, in that 2-acre walk-in closet of yours, how many T-shirts are there?
600 T-shirts. He's like Steve Jobs in there.
Are they arranged in like a spectrum and you go by mood, or are they? Because I've only seen blue and gray.
Yeah, well, we've got like kind of a green one. It's usually whatever's closest to the door, but I might do the next podcast from my closet, which is I'd actually 2.5 acres, not just 2.
And these are generic. There's no graphic on any of these tees. Like, have you ever considered that, like a Metallica T-shirt or something like that, or just?
I have. It's kind of like coming up with an apartment name or the name of your real estate community, where you just want to come up with the name that makes 0 sense. You pay a lot of money for it, and the whole purpose is as not to offend anyone with this name. But we can all agree it's the worst name of all time.
So these are just inoffensive T-shirts.
Yeah, right.
Yeah, but you're not drawing lines in the sand.
No, not yet, but maybe for future episodes, just to keep you guys. I might do one with no shirt on.
See, that would be a brand. That would be a brand. You're talking about going to conferences. Like, it's one thing to stand out in the sea of blue blazers with a T-shirt. Another one,
no shirt on at all.
It's the guy. Have you ever seen Brett? Yeah, he's the guy in the corner, no shirt. Yeah, that's it.
The guy who's perpetually ready for a frat party.
Sir, have you been working out? Not since 1999, I haven't. Can you tell?
That could be a whole new brand thing. You could do a podcast, Paint Your Chest.
Give me a minute and I can have a wardrobe change. Okay.
I wonder if Brett, if we can notice themes, like the way Tiger Woods would wear a red shirt on Sunday. I wonder if Brett, after he gets frisky with his old lady, puts on the red T-shirt to celebrate the next day.
Now go back to no shirt. I'm just walking around with no shirt.
I'll talk about this before.
Brett with this shirt off. This just unsubscribe across the board from a lot of people. We're trying here. All right, so let's see here. Let's share this bad boy. Okay, so this is a 34 unit, what I would say a townhome deal in Seffner, Florida, which again is kind of East Tampa as you're coming in on I-4. And so it's south of I-4 and kind of just north of Brandon, which has experienced a ton of growth here over the last 10 years. And so I think I'm on record as saying I like these larger format units, just being differentiated from kind of conventional multifamily. But you've got average square footage of pushing 1,400 square feet, 3 bedrooms, 2.5 bath, and 2004 construction. So don't worry, we're going to get into the value upside here too before it's all said and done. And there's a listed price here of $9.9 million, which is about $390,000 a unit. $290,000 a unit, which again doesn't seem super offensive, but as you kind of look through the pictures here, I think it becomes pretty evident you're going to have somebody, whoever buys this, is going to be undertaking some sort of capital improvement plan, would be my guess.
So it's a series of describe it if you can't see it, but it looks like a series of duplex type buildings, 2 units per building. And how many are there altogether?
34.
And all of them are the same, 3 bedrooms, 2 baths?
Yes, that's what it looks like to me.
Okay.
What's the single family home price around here?
That's a good question, and that becomes one of the very important metrics kind of in this built for rent space. But I would assume that this is a premium. So, I mean, the tough thing about this too is you got which wouldn't be surprising in Florida is you've got kind of these RV / kind of trailer things here to what looks like the east. So don't know.
Shocked to learn this.
Right. One thing we do well in Florida are trailer parks. So we've got that going for us, which is nice. But I think as you can see by the bigger map here, I mean, you do have good access to I-4 and I-75, which is how you get everywhere over in the Tampa MSA.
So with this type of product, I imagine there's 2 ways you can do it. One is you can try and hit a rent that is some noticeable discount to a mortgage payment. So maybe you want to be 20% cheaper than a mortgage payment for people to go, yeah, this makes sense to me. And then maybe you've got to stick to your tenant base. I suppose the other way you could go about it is you basically charge the same, but you just expect you're going to have turnover. And the people who are coming in there are really coming in because they're moving to the area, but their home isn't quite ready. They're building a new home and they need a place to stay, and they're a little less price sensitive. And so you can charge basically close to the mortgage. You can charge a decent rent, but you're going to have higher turnover. You're going to have a little bit more concession or downtime or something like that. Am I thinking about this space correctly and how you position this?
Yeah, I think so. I think with all the net immigration, or just maybe easier said, people moving to Florida, I think when people get here, it's obviously like a different country. So people are kind of saying, well, where do we live? So let's rent a place somewhere. But I do also agree with this being probably more of a price sensitive location than some other areas, which I'm a big believer in kind of masses versus classes today. So kind of a lower, more approachable rent number for living situations, because the home ownership cost is a problem. And I think 92% of the top 150 MSAs in the United States, and not probably getting any more affordable with insurance costs and real estate taxes. I think there was an article in the Wall Street Journal talking about how like that percentage of real estate taxes and insurance is now 30+% of your living costs when you're talking about home ownership, which is a pretty big number.
Sure.
Any sense about school district there?
I do not have that information. I would assume with it being in Florida, not good. Not gonna be probably a good pipeline into Harvard or MIT, if I had to guess. But they do play good high school football in Seffner. We could probably Google famous high school football players from Seffner. So My rule of thumb here is if you play good high school football, it's not probably the best location.
Wow, that's actually, that might be spot on. Why the question I was asked? Why would someone want to live here? I don't mean that in a negative way. Just, are you close to Tampa? Can you commute? Is there stuff around?
Yeah.
Price your best amenity.
Yeah, and I think price, and then also again, one of the things I say about places in the Southeast, and if you're in Atlanta, the average drive time's 30 minutes. Pretty much everywhere in the Southeast, including Texas, you're driving 30 minutes, let's say. So one of my go-to lines is you don't need to be close to any single employment demand driver. You want to provide residents easy access to get to multiple dynamic employment demand drivers, and being close to 75 and I-4 here certainly checks that box in my opinion.
Sure. Okay. So I'm a half hour from several employment hubs?
The max for a lot. I think you get to downtown Tampa in less than 30 minutes, and Brandon's become kind of a pretty big employment hub too.
Okay. Interesting. Okay. And so then it's, how are we priced? And how do you price these? You deal with this garbage all day. How do you compare this to conventional multi? What's that premium? You're looking at 3-bedroom apartment rents in the market, and you think we should get that plus X%?
Yeah, I mean, I think that is ultimately location dependent, but I think the value proposition here is being on grade or on the ground and only having one neighbor to either side or on one side of you here. And I think what you're going to find for these build for rent or townhome larger format units are more family oriented. And one of the stats which I find interesting about build for rent is that, or build to rent, whatever the nomenclature is the average resident there is 43 years old versus an apartment I think is 31 years old. So I think this is kind of to go with my first SAT word, if purchasable is not one of them, I think this kind of fits the matriculation of life for the greater portion of you. I know matriculate. That is used in the right term, by the way. I do know that. I ripped that off from somebody. I didn't come up with that one.
That's a tough one. Okay.
Brett, Brett's the guy in the corner with the T-shirt talking about the matriculation of life. Yeah, that's him over there.
Yeah, next episode I'll be talking about the matriculation of my own life, which is a lot of different things.
Brett's telling people, I only look dumb.
Don't look yourself short.
Okay, and this is 30-something units. So, you're defining a regional. I guess 2 questions. 1, how do you manage it? And 2, is that the right size for these things? Do you find that big communities are harder to fill, less desirable?
Yeah, so that's a good question, Elliott. I mean, I think, and I can't really, you guys have a waiting list probably hundreds deep on a lot of these, Section 8 or tax credit deals. And here, one of the bigger learning lessons that we found in this space is it does lease up a lot more slowly. So a lot of groups kind of when they were getting into the space was saying we need 175 to 200 units with full amenities. Now, a lot of the institutional groups are saying, actually, the smaller unit count is what we like, and we probably don't need any amenities. But yeah, I think that is, it kind of leases up more. I mean, if you're doing 5 to 10 leases a month at one of these, brand new deals that is doing its initial lease up, that would be a big win. So it's more like an active adult deal where traffic's a lot slower, but what you're hoping for is the rent's a lot higher, the premium to conventional retail. And then the other part of the thesis here is given the fact that there's not a lot of 1,400 square foot, on the ground rental living situations, that your resident base is more sticky here. So you're saving money on turning 60% or 50% of the rent roll every year. You're hoping to probably turn closer to 20.
You afford to staff this place? Does it throw off enough cash, or did not fully staffed?
I think this is a situation where you're kind of hub and spoke, or you've got a local management company that can kind of come in and I think technology is certainly helping the evolution of this space too, even at conventional multifamily. But I don't think you have a dedicated on-site team here, Elliott. Just to your point, too hard to afford that or spread the cost over 34 units here.
Sure, that makes sense.
What about insurance on something like this, Moss?
Yeah, good question there too, Eric. What we have found out, we certainly know a little bit more than most in the build for rent space, but certainly learning lessons every day, is the insurance market is starting to figure out this space a little bit better too. And if you just think about it, if you've got one of these duplex units and that burns down, your loss is much more manageable than a 30 unit, building burning down, if that makes sense. So kind of our back of the napkin, again, depending on coastal regions, is like $1 to $1.25 a square foot insurance for, kind of this townhome duplex type product.
And do we have a price? Do we got a price on this one?
We do. We've got 9.9 million. Rents are about $2,300. That's market rents. And looks like the brokers here are looking at like a 4.4% rent growth figure, which, probably in Florida is not offensive, I would say.
So what's that on a per unit?
It's $290 before any capex or, any sort of closing costs or anything along those lines.
Mm-hmm.
So definitely if you're checking out roofs and ACs here, just in this picture alone, you can see some of these roofs, and I'm not a roofing guy. I think that probably goes without saying, but I think roofs and air conditioning units is where you're probably doing a fair amount of the spend, which hard to get any sort of increased rent there. But I think you would probably look at upgrading some of these kitchens, or doing some other sort of value add strategy here. But then the question becomes, does the resident base want to pay another $200? They want to take their rent from $2,300 to $2,500 or whatever you.
I'm skeptical that that's true. I know that that's always the pitch, but you've really got to be in the right area. And I think that and I don't know this area that well, but sounds like it's maybe a little more price sensitive.
Yeah,
of a submarket.
I would agree.
So I think price is your best amenity on a lot of this stuff. And you get in, you start renovating and saying, well, everybody wants granite countertops. I'm going to put them in. They'll be happy to pay me. I don't know that that's true. I mean, that $2,300 renter going to $2,550, something like that, they probably will say, well, for $2,550, maybe I'd choose to be in a different location. I don't know that that's true. I'm wary of that pitch.
Yeah, well, that's the cool broker story, right? Only takes one.
Sure.
But I think it's for as tough as it is to get new development deals to pencil, it's the cost for some of these interior rehab or improvements isn't getting any cheaper either. So you've got to make sure whatever amount of money you're spending, 10,000 a unit, you're getting some sort of return on that, and that equation's getting harder and harder with where construction costs are and labor is.
Right. And if I'm all in at, let's say, $310 a unit after capex and closing costs and those kinds of things, I don't know that an unbundling and sell off of these units is terribly profitable, right? I mean, I don't know that you're selling for much more than that. So you didn't have to think, do I just like this as a rental? And there's probably a number there. What's the suggested going in yields out there asking price?
Well, so I give these guys credit. I mean, they're the T12 NOI is 593 and their pro forma NOI is 613. So it's a 6.
That's A, not terribly offensive from an asking cap rate, and B, it's not like they jacked up the pro forma a bunch. That's a refreshing change of pace.
Right. And just looking at this thing.
What kind of debt could you get on this, Moss?
So that is another good question here. On this type of deal, I would think this would be kind of bank debt. The agencies don't love this stuff because they still are trying to figure out as well. So this feels kind of like your local bank. I mean, the sales price, let's just say 9.5 or not. Let's just say it's $10 million. I mean, if you could get $6 million from a local bank or even $7.5 million, I think that's how you skin this cat, assuming that's not an offensive or politically incorrect term anymore.
Well, but then you're talking negative leverage day one because your bank debt's going to price at 6.5 to 675.
Right. But I mean, is it fair to say that's kind of the case for most of these residential rental deals at this point?
Well, we're seeing debt at like a 140 spread.
Okay. Well, that's all Mission, not to dork out here, but that's a lot. I mean, they want exactly what you have, right? I mean, that's kind of
right.
Part of that.
All right. So we can get that around, I mean, I don't know what today's treasury is. It was like 4.6 and change yesterday. So somewhere around 6 is probably where our debt would be. So we'd be sort of neutral here. And so then I guess what you're really, I mean, ideally in this kind of scenario, if I don't believe in the value add story, which I'm skeptical of, then I'd like to see positive leverage by the end of year one, because there's not a whole lot that I can do that's going to borrow Brett Moss term, effectuate change here. Yes. So I just have to really buy at a number where I think, okay, I'm comfortable that my going in yield is going to put me in positive leverage territory in 12 to 18 months, something like that. I think a buyer would take on that level of risk. That's probably who you're going to be competing against. As much as you'd like to say, I want positive leverage day one, like obviously I'd like 300 basis points of positive leverage day one. But if you're talking about, can you buy in the market, feels like that might be the risk tolerance that people might have for this type of stuff.
Yeah. I think you're banking on rent growth and markets like Florida too, right? And probably not going to happen out of the gate. But if you subscribe to this undersupply issue that's going to play out, and I do, you are banking on some sort of outsized rent growth and, years 2, 3, 4-year hold period.
I don't know that I'm a buyer at their exact number. I probably am a buyer at a 6.25 to maybe a 640 cap, assuming I can get positive leverage 12 to 18 months out. Something like this.
Yeah.
I think if I'm in that space, so that's probably going to put me closer to like 9.2 million. But I don't know. It's better than that dog with fleas you brought us in Rincon, Georgia.
Okay. All right. So we're making progress is what I hear you saying.
Yeah, I think Eric's going to tell you no for a whole bunch of reasons. Eric's going to be a buyer at like a 20 cap.
He said 12 on the Rincon, Georgia deal.
Yeah.
But then circling back to the question, just scrolling around on Zillow, there's newer townhome product for sale for, significantly less than this. I think that will be deals governor on them getting close to this.
Yeah, I think that's absolutely right.
Because the question then just said, why don't the three of us just go buy these kind of one-off for $250, $280 a door, and they're much newer, and CapEx you would think would be a lot lower for the foreseeable future.
That's your answer. That's your answer right there. I think people say, well, economies of scale. It's like, meh.
Yeah, I think that's that does help solve the management equation, but yeah, economies of scale. I think some people are going to say, well, it's only 34. I'll just go buy a 34 around the corner.
Yeah. I like the idea. I do like the idea of this. I like the idea of sort of a detached, duplexy thing. You've got some grass and you are, to me, I can imagine that, you're inserting yourself in a neighborhood for folks that are unable or unwilling to purchase a home. This is like home-like, and it's in a place where people want to live. Yeah, Tampa is a great, terrific, really terrific market on a lot of ways. Mm-hmm. Love the Florida story, love the Tampa story, and if you could have, a nice collection of, call it rental homes in a single place, in Florida at a reasonable price in a, accessible neighborhood. I really like that. I always remember that, Warren Buffett talking about to him, the greatest investment would be a huge portfolio of single family homes with a little bit of debt on them. But the thing for him was always, having somebody to run them.
Right.
Them.
Right.
And I think here there might be enough to where there's probably a local management group. I'm sure there is.
For sure. Yeah, they do some part-time stuff. Yeah, that's solvable.
That could handle this. It just feels like the price isn't quite right. But I think on something like this, if one could be in this thing at a discount to, nearby homes, and let's just say the neighborhood checked out and school district checked out, and you could have something like this that you put $3 or $4 million into, had kind of you weren't getting punished on the debt, put a amortizing loan on it. It'd be a kind of cool thing to have, I think.
Yeah.
All right. Well, let's put it to a vote. I mean, I think we're there, right?
I think so.
I'll ring me at a price.
Yeah. Eric's a buyer at a price. I think I'm inclined to agree. Whereas in Rincon, Georgia, there was no price. Like if it was free, I would just say no, life's too short.
Right.
But I actually do think that I'm a buyer here at a price that's probably close to where it trades in the market. I think it could be interesting.
Yeah, no, I would agree with that. And I think, Brunswick, Georgia, or outside of Savannah is one thing, but being outside of Tampa certainly makes you feel better on the exit here. Not that anybody in real estate's worried about exits. Oh, wait, that is becoming an issue again. You can't buy a deal on the surface of the moon.
Well, I like it.
All right, we ringing it?
I think we're ringing it.
Pay price. All right. This bell's getting out recently.
This has been good. Thanks, boys.
All right, guys.
All right.